On a crazy day for the market with some huge headlines on the AI front, I've been keeping a close eye on a hostile takeover bid that might have flown under the radar for you. This morning, QXO launched a tender offer to buy Beacon Roofing Supply for about $11 billion, $124.25 per share. Stock closed today $119.58. It's up $1.16. Now, this has been an ongoing saga. Starting in November, when the Wall Street Journal published an article stating that an acquisition offer had been made by QXO, but Beacon's management team wasn't receptive. Well, it's not receptive, believing the company will ultimately be worth substantially more than what QXO is willing to pay. Now, last week, Bloomberg reported that they're soliciting takeover bids from rivals. We got to find out if that's true. There could be rival suitors. Who knows? But what does it all mean for the building supply company that, I have liked for many, many years? Let's check in with Julian Francis. He's the president and CEO of Beacon Roofing Supply to find out. Mr. Francis, welcome to Mad Money.
Thanks, Jim. Great to be here.
All right, so Julian, I've always admired your company because you are the dominant company, 50 states. You do incredible work. Everybody knows that when we think of roofing in our business, we always think of Beacon. So how is business?
So, Jim, it's been a terrific run for us. I mean, this company's in great shape. We've transformed the business over the last several years.
Since you came in, frankly.
Since I joined the company, yeah, the stock's performed. We've done that transformation. The stock's performed. We're up 300% since I joined the company. That's about $4.5–5 billion of value created over that period of time. So incredibly proud of that. We navigated the pandemic. We focused the portfolio on our core business. We brought in some great talent, and we launched our Ambition 2025 plan, which was to grow top line, grow bottom line, and we've been continuing to do that. And that's been an environment where the macro has not been the kindest to us. I mean, we've had rising rates environment. We've had very low housing starts on a historic basis. You know about the underbuilding. And the commercial sentiment on the non-residential construction's also been a little bit soft and choppy post-pandemic. So we think we've been doing great, created a lot of value in a tough environment.
Well, now, Julian, I've got to tell you, my colleague David Faber this morning said a couple of things that really kind of astonished me. They said, look, in this new regulatory regime, they can make this offer, Brad Jacobs behind it, and it can get done in as little as 20 days. Is that possible?
Well, possible. I'm not sure that that's possible, Jim. Okay. But look, we are where we are. Obviously, we got the news this morning. It's going to be, it's an exciting time for the company. We've been trying to get the news out. We wanted to share the news that we had with QXO. But we're excited to get our Investor Day, which is March 13th. So we're looking forward to getting to that. Yeah.
Well, I hope that if David's wrong, then you get a chance. But, it's fluid. There are many things.
Yeah, absolutely.
But, we did some back-of-the-envelope work here. There was a company that we own for my child trust called Home Depot. And we were really thrilled that they bought this company called SRS. Now, I know they paid a lot for it, but it's worked out really well. If we use the same EBITDA multiple, we would get on your stock, the run 19, you get $204. So I'm trying to figure out how they came up with the 125. Now, of course, I could go to Brad for that. I've known Brad for a long time. But what is the price that you think, I think we've done a great job, but this price is one that I can't get us there in 5 years. Let's take it.
Look, I'm not going to speculate on what the board determined the value of the company is, but what we're dealing with right now is an offer for $124.25 per share. We determined at the time, the board determined at the time that was insufficient. We went back and tried to be constructive with QXO.
Constructive meaning, look, we can do better. Constructive meaning, this is where we could be. What's constructive mean? I don't think you may think that.
Constructive is we try to engage with them, and we try to have a conversation. We offered them our long-range plan, let them under the hood, to show them what we were capable of doing, and to revalue the company based on what we were prepared to share with them. They said no. We tried once again to go in there. We offered them an NDA agreement that allowed them to continue to do what they've done today. And it was a short-term NDA that still allowed them to take the offer straight to shareholders. They said no at that as well. So here we are. We tried to be constructive, as I said, with engaging with them to see if we could get the value to where we thought it was the right number.
Well, let's puzzle through this. I think there are probably people at home who are saying, who is this guy who suddenly creates this vehicle and then goes after another company that's done quite well? It seems unfair. Should that even matter in the equation?
No, this is about shareholder value. I mean, ultimately, we are here, I lead this company in order to generate shareholder value.
Right.
That's fundamentally it. We do it through being a great company. We do it by hiring great employees. We do it by delivering roofs and doing hard things. Right. So no, it's not personal. It's not about that. It's about value and about shareholder value.
But could you argue that the stock would be somewhere around here without a takeover bid, or do you think it would fall drastically if Mr. Jacobs walked away?
Look, I can't answer that question directly.
That's a very fair question, because I think I know that I would have paid more for Beacon than the market was paying for it, because you can become, I'm looking what's happening in North Carolina, I'm looking what's happening in California, and I'm thinking, this is a stock I would reach for, and I might reach for more than the stock price.
Yeah, look, I'm very proud to be able to say that we operate nearly 600 branches across the U.S. and Canada. We are in all of these communities. Right. We're in Asheville. We're in L.A. We're in Augusta. We're in these places that get hit. Our people are part of those communities, and we're very proud of the work we do helping rebuild these communities. It's a terrific industry. It's a terrific job. We got terrific customers and terrific shareholders.
And just to be sure, people should know, you reported revenue CAGR of 8%. From 2019 to 2023, during a very difficult period for the housing business. It's not like you guys have been, it said, yes, woe is me, the housing business not building houses. That's not been the case.
No, this has been something that, like I said, that goes back to the transformation and the launch of our Ambition 2025 strategic plan. We'd paid down a lot of debt. We had a very high debt load when I joined the company. We got down that. We saved $50 million in interest expense every year. We put that back into the business to refresh our fleets, to refresh our facilities, to invest in growth, and that's what we've been delivering.
Well, I hope the shareholders hear you. I think that you've done a great deal. I know it's made the best offer, whatever, but I wanted you to tell your side, and I think you've really told your side excellently. And I know, let the best offer win, but I certainly know that you've done a great job for your company.
I appreciate that, Jim. Very kind of you.
Absolutely. That's Julian Francis, President and CEO of Beacon Roofing Supply. Even from my days at my old hedge fund, I'd always say, this is the only one in the category that's a winner. Thank you so much.
Thanks, Jim.
On the
Great
show.
to be here.
Coming up, lightning doesn't just strike twice in Cramerica.
Booyah, Jimmy Chill. Booyah, booyah, booyah. Thanks for taking my call.
It strikes every day. Cramer is back in a flash with your questions. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.